Let's start by taking a minute to read and review the risk warning. Please read the risk warning. You should now see it on your screen. The risk warning states that trading in Forex CFDs and other derivatives is highly speculative and carries a high level of risk. It's possible to lose all your capital. These products may not be suitable for everyone. Okay, today we will speak about the Fibonacci tools, how to use it in our advantage in the foreign exchange market and in the financial markets in general. So the principles of Fibonacci theory provide the basis of multiple different technical analysis tools, indicators, and also strategies. So today we are going to run through the Fibonacci ratios, retracement, and we will have live trading examples at the end. Okay, but let's start by before all that to get to know who is Fibonacci and why his work is so important for the financial markets and for the traders. So this is the if you can see the picture, this is Leonardo Pisano, or as we call him, Leonardo Fibonacci. He is an Italian mathematician, was in the Middle Ages, who wrote the book which is known for Liber Abaci, or in English, the Book of Calculation. This was published on the year of 1202. So in his book, he discussed a variety of topics, including how to convert currencies and measurements for commerce, calculation of profit and interest, and several mathematical and geometric equations. However, there are two things that jump to the forefront of our discussion in today's world. So when we mention Fibonacci, we speak about mainly two things. The first, in the beginning portion of Liber Abaci, the book of calculation, he discussed the benefits of using the Arabic numeral system. At that time, the influence of Roman Empire was still strong, so the preference of most European citizens was to use Roman numerals. So, however, in Liber Abaci, Fibonacci provided a very powerful, influential, and easy to understand argument for using the Arabic numeral system. From that point on, the Arabic numeral system got a strong foothold in the European community and soon became the dominant method of mathematics in the region and eventually throughout the whole world. It was so strong that we still use the Arabic numeral system to this day. So if you have never seen for any reason the Roman figures, this is, if you can see now in my picture, let me use this laser pointer. So this is the Roman figures, as you can see. Maybe you can see it now in some, luxurious clocks or very old clocks that you will see this Roman figures, and this is actually the Arabian numbers. Now you refer to it as Latin or English numbers, but actually this was the Arabic numbers, the ones that we still use until now. So if you just to give you a little brief of how this is very huge impact, if you can see here, to write a number like 3,999, if you can see my screen in the right, so you can see this 3,999. You see this is the Roman equivalent to it. Like this is a very huge number. And of course, if we go to like millions, the screen will not even be enough. So you now know why was this very important, and you only need to know that until now we still use the Arabic numbers in our mathematics and calculations. So this is the first impact of Fibonacci's work on our understanding. So the second important section of Liber Abaci, the book of calculation, that we still use until now is the Fibonacci sequence. Okay. So please focus with me. There will be a lot of numbers. I will try to simplify this as much as I can. So what is the Fibonacci sequence? If you can see my screen, the Fibonacci sequence is a series of whole numbers where each figure is the sum of the two before. So it starts with 0 and 1, which are known as the seed numbers. The next numbers is like 0 plus 1, followed by 1 plus 1, and so on. So if you can see my screen, this is the Fibonacci numbers: 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and so on to infinity. Okay, so maybe this might look a bit confusing at first, but if you look closely, this will be very simple to you. For example, let's start 0 and 1. This is the seed numbers. So if we combine them, 0 plus 1 equals 1. So now we will add 1 plus 1. This will equal 2. Now you understand. You just add the number with the number before it. So 2 plus 1, it's 3. 3 plus 2, it's 5. 5 plus 3 equal 8. 8 equal 13 when we combine it with 5, and so on. Now you get it. So this sequence, the Fibonacci sequence on its own isn't hugely important to traders. Instead, it supplies the numbers of the Fibonacci ratios. So now we are moving step by step. We know the Fibonacci numbers, and from that, let's move on to the Fibonacci ratios. What is the Fibonacci ratio? It's a series of percentages calculated. Now we understand by dividing figures. Please confirm if you can hear my voice. If you have any issue, please write me on the chat. I'll just, okay, I think everything is working fine, so let's move on. So the Fibonacci ratios, as we were discussing, are a series of percentages calculated by dividing figures along the Fibonacci sequence. Now we understand the Fibonacci sequence, so there is few different ratios, but the key ones are 23.6%, 38.2%. You don't need to memorize this, okay? 61.8%, 78.6%, and of course the 161 and 0.8%. To see how they work, let's take a closer look of the math behind the 61.8 ratio. How we got to this ratio, okay? See, now all we have to do is to divide each number in the Fibonacci sequence by the one that follows it. So we do this along the chain, and we will quickly spot that this percentage come to 0.618 each time. So from 21 divided by 34 onwards, we will go to this ratio. So if you can see my screen clearly, please send me if you can see my screen. Okay, if you can see it, you will see like we will divide each number by the number before. So 0 divided by 1, 1 divided by 1, and so on. When we reach 21 divided by 34, you will find that the answer it will be equal 0.618. And then when we go on 34 divided by 55, it's equal the same number. 55 divided by 89 equal the same number, 0.618, and so on to infinity. So from this number, if we convert this to percentage, it will be 61.8%. This is the how we calculated and found the this percentage of 61.8. And to find the 161.8 percentage, you divide each number by the one that precedes it. So the number that comes after it. So you will find that from the 55 divided by 34, that the answer is 1.618, and so on. From 89 divided by 55, it will give you the same percentage, and so on to infinity. So these ratios, the 61.8% and 161 the golden ratio, 0.8%. This is very important. This is not only important because we find it in the Fibonacci sequence, but actually we can find this in nature. We can find this in art. We can find this in buildings. It's everywhere. So this is very, very clear that this percentage is not normal. There is something here, and that's why this is the golden ratio, and this is the most important ratio of all the others. So there is this table because there is other Fibonacci ratios, and this is how you can calculate this. You can refer for this later, as I told you. I don't want to waste more time of this calculation. Now you can, you know the idea, but just to give you an example, if you divide a number by second following, you will get the 0.38 or the 38.2%. And if you divide by the third following, you will get the 0.23 or the 23%. Okay, you can come back to this later if you want to clarify. The table has every ratio, and also the 50%. Okay, the 50%, it's commonly used in the Fibonacci analysis. We will go now to the live example, but just to clarify, this is not a Fibonacci ratio. Okay, the 50%, it doesn't appear in the sequence, but it's a key ratio. Maybe it came from the Jan ratio, which is created by W.D. Jan in early 1900. So whether the source of the 50% ratio come from Jan work, but it's very important and relevant level when we are trading. So it's often included in the technical analysis as the Fibonacci ratio. So now you know the science behind it. Let's move on to the actual practical use of this. This is how the Fibonacci retracement look on a chart. We will go now to a chart, but just to give you an idea how it looks. Now you know that when we have a trend, an uptrend, it's higher high and higher low, like from this ABC move. So from this A to B, this distance, the price move for a correction consideration for some time. We predict that if we have the Fibonacci percentages in this move, that the price will react on these levels as a support and resistance levels. So for this example, you can see here the 50% and the 38 and 23. And also there is expansion to the 161.8. This is the science behind the Fibonacci retracement. Okay. Now let's move on to the real magic. When you apply this to the actual prices and see how it works. This is the actual gold price, 1 hour chart. This is now just to give you an idea how you draw this, you get this is an uptrend. Okay, so we start from the swing low, from the lower point to the higher point. The percentage is calculated by itself. This is, I'm using MT4, and you will find this in each and every trading platform. So it's calculated by itself. You can see here, this is the 61.8 percentage and the 50% and 38.2 and 23.6. You can see here until this time, we didn't know where the price were going. It went exactly to the 38.2 and then bounced up and then back. And we will continue to see this over and over again. This is the dollar-yen daily chart. This is the very top, the very high. So this is the opposite. We are now applying the Fibonacci retracement tool on that downtrend. So we start from here to here. Okay. If you can see my screen, this you see this arrow, red arrow. This was the day that I draw this Fibonacci level. Means this candles was not created yet. And here you can see that the price moved up and made some consolidation and went to the 38.2 level and went back to the 23.6 level. You can see now that these levels represent a support and resistance level, and also give you an indication of if the trend is actually reversing, or this is just, you know, some consolidation. Okay, let's move on to the live examples. Please, if you have any question, if something is not clear, send me right now so I can answer your question. And while I do so, let me go to the charts and give you some real-time examples. Okay, I'll show you now. This is the gold prices, the one I was just showing you in the presentation. This is the time where I draw the Fibonacci retracement from this swing low to this swing high. You can see that it's like it's using it as a support, and you see here, this was a support for hours and then resistance. And when it's closed down the level, it went to the other level. You see? So another example for the daily chart for the dollar yen. I just want you to let me do it in I will show you now how to draw it. Okay, you use the insert. Can you see my screen? Insert Fibonacci. I'm doing it very slow so you can see Fibonacci. Then you will have many options because there is retracement, time zone, fan, arc, and expansion. Now let's use the retracement. This is the most important, and the expansion. So retracement, now I have the tool in my hand, okay? This is the dollar yen, this is a downtrend. So I will get from the very high, very top to the bottom. See, it was drawn by itself. The prices now, the calculations are in the percentage. You can see here where the percentage is. So from this point, the price moved up until the 38.2% exactly. You can see this? Exactly from this point, it acted as a resistance level, and it went back to this level, okay? You can see here, if you can move this to a 4-hour chart, you can see that even when it broke, it reacted as we usually see in the support when it's broken, retest. You see? The prices can't see these levels. The percentage we just draw it now, but we can see that the price is actually interacting with it. You see this candle? This is a 4-hour candle. You see this, the tail came out to the 23% and came back. Actually now, at this very moment, we are testing, or let's say retesting the 23.6 level of the Fibonacci retracement of this very strong downtrend. Okay, we can apply it also in you know, some very short term, if you want, like this one. This is a 1-hour chart, okay? From this high to this low. This is a downtrend. You can see what happened after this. The price is acting and consolidating between these levels. And even at this very moment, we are testing the 38.2% from this move. The idea behind this is, you know, that when the trend is going up or down, it will not be like a line, it will be moving in lower lows and lower highs, as you can see in a downtrend, or higher highs and higher lows in the uptrend. So you know that the price will move for some time against that trend, but for how long? How can you calculate this? The Fibonacci retracement is designed exactly to give you this idea of where the price is likely will go and test these levels. So you can choose the first and last candle while you are drawing the Fibonacci. This is the most important thing. Where are you going to draw this? Because you need to draw this in a levels of impact, levels that the actually market were moving from. So for this example, if you can see here, this dollar yen example is very strong because we had an uptrend for a very long time until these 162 levels, and then there were this strong move, very strong move until the 141 and 79 points. So this is a very strong move. This is not normal. This is like huge move. There were some change in the policy. The Fed made some rate cut and promised that he will cut more, and in the same time the Bank of Japan increased the interest rate. This is not just we are drawing lines on the prices, there is actual impact in the market for these times. So we just trying to find the levels where, okay, technically we need some levels, we need support and resistance, where this levels should be. The Fibonacci levels is always working. You can find it working every time. Okay, let's move to something else. Somebody asked me about the euro dollar. I'll use my template. Okay. The first thing you need to do is to identify the trend. Okay, let's keep, this is the euro dollar 1 hour chart. Okay, so the first thing you need to know is identify the trend. Where is the trend? This is obviously an uptrend. Okay, so we will draw it from the insert, Fibonacci, retracement. We will start from, okay, this move here. This is the start of this uptrend until this. So we expect that now we are going to test the 38.2%. According to testing this, we have until this level, the 61%. Until this level, we can see the price retrace. Until this, the price can reach this level. But if the price broke this level, we would consider this a breaking of the trend. So for these levels, this is only a support level. We predict that the price, you can see here, you see this tail, it came up from here. Now again, we are now in this moment. If I'm going to enter a trade, I would buy. Let's do it. And I would put my stop loss below this level. This is not because only Fibonacci, you can combine Fibonacci with other analysis, because we already have this swing low for this candle. So it's like, yeah, it's in the same level. So we will use the same level to put our stop loss. So you see, it's not only the Fibonacci, but also the chart has clear support levels. You see? Yeah, I can put my stop loss here below this level. Even so, this level could be broken and we go to the 50% level. We can also go to the 61% level. But because now I'm seeing some price action, I see some support, so I predict there is a support level here. It could be broken, yes, of course. As I always repeat, anything in technical analysis or in trading in general, this is an art. This is not an exact science. We don't say that 100% this level will be a support, but we predict. We have some tools that are trying to give some predictions. It's at the end, it's only prediction. It's not 100% sure. So this is for the euro dollar. Okay, someone asked how to okay, to make, if you opening chart in the MT4, it will be like this. Okay, so if you want to make a chart with like different view as mine, first of all, you can choose the Japanese candle stick from here. you can click and right click on the chart itself, choose properties, and then you can here choose whatever you want. You can change the foreground and background. For example, you can change the candles. I would like to make it red, the bar down. So the bull candle, which is the going up candle, it will be green. The bear candle will be red, like this. And that's it, okay. And I don't like the gird. I like it plain like this and close on, and that's it. That's how we do it. And also you can save this. If you can see here, right click, template, you will have save template. So you can save it and you can name it like say webinar and save it. So now if you, let's open a new chart, right click, templates, load template, and I will choose the webinar, and this will be like this. You can see now it's already applied, and everything now is just as I choose to be. So if there is any more question regarding the Fibonacci tool, please feel free to send me on the chat. Also, we always have these webinars in the Thursday, 6 p.m. Please feel free to be in our upcoming webinars. It's for free, and we always like to see you in this webinars. We try to provide value and give you some tips and tricks on how to be a better trader. So I think if there is no more question, I will be ending this session. Okay, it seems like everything is fine. Please join our upcoming webinar. It will be in next Thursday. We will be speaking about the Elliott waves. If you are interested in that, please register. And also you will have the opportunity to review this webinar on our website and also our YouTube channel. If there is no more question, I will now end this session. Okay, thank you for your time and see you soon. I will end this session now. Goodbye.